Why trying to sell mortgages, also known as loan originating, is especially grim, and why pursuing a career in home loans is pretty much doomed to failure. I gave the mortgage industry, the whole loan originator gig, a serious go of it a few years back. That was before the entire real estate market melted down. But even then, I knew after about 6 months that it just wasn't for me, and it didn't work out, fortunately, and I ditched just before thousands of loan officers were driven out by the economic collapse. It's odd, really, that I even gave it a whirl. I already had a great freelance sales gig in place, and that was earning me a lot of income already. But I'm the kind of guy who's always out there looking for something new and more exciting. And it was right when I was moving to Dallas and the whole mortgage consulting thing seemed as if it might be fun, and I had buddies in the industry pulling down $25K a month routinely, so I thought, what the hell, and I figured I'd give it a go. But it didn't take long for me to realize that I was just in the wrong place, because there was no way I was ever going to create the lifestyle I wanted for myself. Even leaving aside all of the stuff I'm about to cover here, and even leaving aside having to pander to real estate agents and what that does to your soul, at the end of the day, trying to sell mortgages, working in that industry is just nowhere near capable of creating the kind of life I've got going on, and what I had come to get used to living for so many years already. The hours, the office, the boss, the stress, the tedium, the grief, it's enough to make you want to jump off a bridge, seriously. But even leaving all of that stuff aside, even assuming you're a glutton for misery and your idea of a good time is a life of constant bitter struggle and mind-racking tedium, fundamentally, there are still 3 main reasons why I think trying to sell in the mortgage industry is really a bad idea, especially right now. The first problem is the gravy train's over. It's become harder than ever to close deals. There are several reasons for that, and I'll name a few of them. Number 1, the housing market has tanked, taking along with it a lot of the people who used to be in the industry. The ones who are left are desperate for business. Now, this has an effect not only of putting you on a crappy level with the client, since it's get the deal or eat ramen noodles all next month, you end up begging for business and cringing under anything a client says or demands, but it also has the effect of making the whole mortgage racket more and more of a competitive rate game. And that's the second reason for why it's harder than ever to close deals. Rates are too damn high, or they are this week, and they might be next week, or they might be next month. They're just fluctuating all over the place, mainly because of government interference in the economy. And your prospects are obsessing anymore over rate. They're ready to cut your throat and run to the guy down the block and leave you high and dry with nothing over 1/8 of a point. What else is making it hard to close deals is the fact that they've taken away all but a small handful of programs. I think you've got 3 now. There used to be dozens. Everyone needs to put money down now, and everyone is stuck at a fixed rate. Like it or lump it. And the problem is, a lot of people are choosing to lump it. And finally, one other thing making it hard to close deals is the increased difficulty to get lenders and propose loans to fall in line with the new guidelines. It used to be deals could be slam dunks and you knew it. You could, heck, you could bury 3 points in the YSP and still slam dunk it. Nowadays, nothing is a slam dunk, even at par, and underwriting can kill a deal 16 different ways before sundown and leave you feeling like you've been mugged in a back alley. So those are some of the reasons why it's become harder to close deals, and that's assuming you can even find prospects to get the deals in and get deals into processing and submitted to begin with. That takes me to the second reason I think trying to sell mortgages as a loan officer is a bad idea. The second problem is it's just flat out hard as hell to attract attention anymore, much less differentiate yourself from all the other loan guys out there. For one, people are jaded and afraid of getting screwed. They've become insanely suspicious, in part because they're being flooded every day with offers for free credit reports, refinancing opportunities, doom and gloom horror stories of foreclosures and mounting unemployment, all of that stuff. Now try marketing yourself as a loan officer. I mean, good lord. You're competing against 50,000 other hungry mortgage guys, and you're competing against huge banks and desperate net branches about to go under, and everyone is selling on price, selling on having the lowest rate. Everyone is fighting to make a buck. They're running ads, they're running banner ads, they're running pop-ups, they're sending out useless mailings, they're falling over each other trying to get someone, anyone in town to refer them any kind of business. It's not a pretty sight. And to make it worse, the big advantage you used to be able to have was in specializing in something, some niche. Well, the guys that made the best money were, framing themselves as mortgage consultants back then and trying to stand somewhere between being a loan officer and a financial advisor. And that worked for a long time, and the guys who were good at it made a fortune. But things have changed. Back in the day, you had dozens of programs to choose from. You could customize a mortgage solution for a client and really bring value to the interaction. You could build a plan for them or build it around their goals and their dreams they have for their family and show them how the mortgage you were structuring for them would help them and their families get where they wanted to go. But that's gone now. Nowadays, you've got 3 programs you can offer. You've got conventional, VA, and FHA. Fixed, fixed, or fixed. And that's it. And that's all. No more money down programs, no more stated income or stated asset programs, no more negative amortization loans with investment plans behind them. There's increased restriction on investment properties. There's a massive reduction of new construction loans and basically an effective extinction of jumbo, much less super jumbo loans. There's just no way to consult or offer mortgage planning when it comes down to a fixed rate. People have been trained to focus exclusively on price in this market, and there's always someone out there willing to cut your throat for 1/8 of a point. So the second reason why I'm against selling in the mortgage industry really comes down to how hard it is to find good leads, and how hard it is to find qualified leads, and how hard it is to differentiate yourself or in any way rise above price. Now the third reason is more personal. The third problem is it just takes so much damn work to try to close a mortgage deal. Even leaving aside the effort it takes to bring in a qualified lead, and qualified here has a whole other meaning when it comes to home loans. Someone can want a home loan all he wants. Whether he qualifies under the new guidelines, however, that's a completely different story. But even leaving aside the effort it takes to get the prospect to want to work with you and to actually come in and be qualified, that still leaves all of the endless documentation required to get the deal closed and a commission check in your pocket. There's the appraisal, there's the sales contract, there's the gigantic, massive loan application, there's the credit check, the required bank statements and pay stubs, the verification of employment and income, the verification of bank funds, the homeowner's insurance, the mortgage insurance, and on and on and on it goes. And then the client still has to actually get approved, and then he has to come up with the down payment. And somehow during all this, of course, you've got to manage to avoid the horde of hungry banks and mortgage companies and other loan officers out there trying to steal your deal out from under you before you can get it to closing. And even then it's not over because it takes time. You have to have, you've got the pure joy of sweating under the stress of endless, underwriting grief where nothing is easy anymore and every closing's precarious and uncertain. That's really what you have to look forward to, and every deal is like that. To earn the commission on one deal, the number of hoops you have to jump through and the number of things that have to go right is quite staggering. So, let's just try to sum up. At the end of the day, trying to sell home loans in the mortgage industry is just hell on wheels. It's getting harder and harder to earn less and less. This year, the industry is predicted to take another slug to the head, and thousands more are going to end up unable to close enough loans to pay their bill, and they're going to quit, or get fired, or see their mortgage companies chaining their front doors closed without so much as a severance check from commissions on the deals that have already funded. I predict that we're headed toward a complete and utter commoditization of mortgage lending in the near future, with mounting government controls where everything becomes cookie cutter in the hands of a few gigantic banks. So unless you want a future in a cubicle, taking down loan applications over the phone and entering them into a computer for $8 an hour, and that's always assuming things don't go completely automated and they actually need somebody to type the stuff in at least, here's my recommendation. Forget the mortgage industry. Find something different. Find something better. And I'm going to be talking about that something better here real soon. And you'll be hearing a lot more about it and seeing more on it at my site at mavericksalesguide.com.